Good afternoon, this is Chris Brecher with Simpler Trading's Chart Patterns Mastery free video for November 7th, 2023. Boy, you had the markets going straight up, sort of. You got a lot of choppiness within the markets today, and the biggest reason is because the daily charts are way overbought. On the other hand, the thing that made them go up was the bond market, and the bond market is overbought and stayed up. So a lot of different things going on. Interest rate sensitive stocks. You would think they'd go nuts today with the bond market, the 30-year bond future going up like you see. Go and check out on the right. NextEra is actually on a 3-day low. How is that even possible if the bond market's rallying? How about the banks? You would think the regional banks that have a lot of bonds on their portfolio and it hurts them, you would think they'd soar today. Heck no. They actually closed on the low. So you have a lot of differing things going on here, no doubt about it. So where are we going with this? Well, number one, when I have this kinds of differing things, I look at a couple of things that are important. One is the ES and the NASDAQ, and I look at where they are on 30-minute charts or hourly, some time frame like that. You're going to see they look okay. When I see them do this, though, and I see some indexes that have halfway decent charts lagging, I'll sometimes go, like in an XBI, when I see it overbought performing that, I will go and buy spreads in there over the market, but not for this week when it's overbought like that, and that's exactly what we did. So we're watching that carefully. But I wanted to get back to the headline of this free thing. And that's when the markets are doing what they're doing, a lot of times you have to be creative. I really pride myself in my creativity. Now, don't get me wrong. I didn't do it today. But a lot of companies can't buy back stock the last 10 minutes. So what happens is the last 10 minutes, the whole levitation goes away. This is something from my Chart Patterns Mastery that I'm going to have a class and also the webinar. This took 35 minutes to go up that much. It took 3 minutes to go down that much because that's a lack of buybacks. The key in there is today, the puts out of the money were too expensive, so I didn't do it. But the key is that right then and on expiration day, it'll be even more important is not just the SPX, because right here, the 4380 puts were like $2. It was just not worth it. So just keep that in mind. But, and this is a big but, a lot of the stocks with big buybacks, here we go again, got nailed on the close. We did great in Lamb Research, making 400 to 700% on Friday, and bless its heart, it did the same thing today. Not expiration, we didn't play it because it's just not enough for a point, but on expiration, that's huge. So we're going to continue to play these 1550 trades, and you'll see the stocks with the biggest buybacks. Apple looked great all day. Look what it did on the close. I mean, that's criminal. Yeah, all day it acted well. All day until 1550, and then it went down 60 cents in about 3 minutes. Amazing. What else has big buybacks? Well, how about Google? Well, holy cow, look what that did. I'm telling you, on expiration day, these could be huge. So just keep that in mind of how fast they can go down. So everybody have a great night. Thanks for listening. Take care. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.